Stop looking at the Bitcoin chart. The most important signal for its next move isn't in crypto. It's coming from an asset the market has ignored for years. In 2025, while Bitcoin chopped sideways, silver went vertical, surging 150%. The reason this happened is a warning about the value of your money. It signals a fundamental shift in the market, one that will leave most investors on the wrong side of history. Silver just had its best year since 1979, launching from $29 to over $70. Bitcoin also had a massive year, hitting a new all-time high of $126,000, before getting slammed by a 30% correction. Both went up, but how they moved is the key. This divergence isn't a coincidence. It's the market screaming a message. So in this video, we decode it. Why did these two hard assets behave so differently? What is the system trying to tell us? And most importantly, how does this set up Bitcoin's next explosive move in 2026? First, the signal. Silver's 150% gain was not a fluke. It was a perfect storm, driven by two powerful forces colliding. The first force was monetary. Inflation was stubborn. The Fed signaled rate cuts. Investors scrambled for assets that can't be printed. Gold climbed. But silver is gold on steroids. It's a tiny market, so when capital flooded in, the price exploded. But that was only half the story. The other half is what made it parabolic. Silver is a critical industrial metal. More than half of all silver is consumed by industry. Solar panels, EVs, AI data centers, they don't want silver, they need it. Think about that. You had record investment demand colliding with non-negotiable industrial demand, all in a market already facing a massive supply deficit. The result was inevitable, a price explosion. The signal is clear. The market is desperate for real scarcity. But this isn't a video about silver. It's about what the financial system is now rewarding. And to see the opportunity, you have to understand why Bitcoin didn't just follow silver straight up. Most people only see the price. They miss the story behind the price. They saw Bitcoin end the year up 120% and called it a win. They missed the critical detail, how it got there. While silver was bought as a pure hedge against fear, Bitcoin was trading like a tech stock on adrenaline. After its run to $126,000, it was hit with a classic crypto liquidation cascade, an event that had nothing to do with the global macro story. This reveals the core difference. Silver's scarcity is physical. A factory must buy it, creating a relentless floor under the price. Bitcoin's scarcity is digital. Its demand, for now, is largely driven by sentiment. When institutions got nervous, they sold their big winners, which included tech stocks and Bitcoin. For a moment, Bitcoin was sold in the same risk-off move that sent capital flooding into silver. This doesn't mean the digital gold narrative failed. It means Bitcoin's reaction is more complex, and that complexity creates the opportunity. Okay, stop. Forget silver versus Bitcoin. That's the wrong way to see this. Once you reframe it, you can't unsee it. The two charts aren't competing. They're telling a story in two parts. Silver's move was the canary in the coal mine. It proves we have officially entered a hard asset regime. In this new game, the rules are simple. Persistent inflation, a weakening dollar, fading trust in central banks. The market is now rewarding one thing above all else: absolute scarcity. This is capital rotation 101. Money moves in waves. It hit silver first because it was the most obvious, most sensitive trade. The tiny market reacted instantly and violently. Silver's rally wasn't the main event. It was a field test for the entire hard asset thesis, and it passed with flying colors. It proved the demand for scarcity is real, and it just showed a giant wave of capital exactly where to look next. So after watching the supply-constrained asset go parabolic, where do you think that money hunts now? To the single scarcest liquid asset on the planet. This setup is why 2026 is poised for the great Bitcoin reacceleration. Silver proved the thesis. It lit the fuse. Now Bitcoin is stepping onto the launch pad with three massive catalysts locked and loaded. First, monetary policy. Fed rate cuts are no longer a theory. They are a 2026 reality. That is pure rocket fuel for Bitcoin. Second, institutional flows. The Bitcoin ETFs are an open fire hydrant of new money. After silver's rally just gave them the green light, institutions are ready to turn up the pressure. Third, Bitcoin's own code. The 2024 halving supply shock is hitting its peak impact zone right now. This is a programmed supply squeeze meeting an explosive new wave of demand. A wave that just watched what a supply squeeze did to silver. A 150% rally for silver was historic. For Bitcoin, that's a warm-up. Silver didn't steal Bitcoin's thunder. It was the thunder before the lightning. In this environment, a full re-rating could see Bitcoin challenge the $150,000 to $200,000 level. The signal couldn't be clearer. Silver's rally proved we are in a hard asset market. Real scarcity wins. And Bitcoin's messy correction just created the perfect entry. Silver validated the thesis. Now Bitcoin inherits the momentum. The question is no longer if capital will rotate, but how violently it will reprice the scarcest asset of all. This shift is happening now. The only question left is if it will be a slow rotation or a sudden shock to the system. But now, I want to hear from you. Is silver's rally the ultimate confirmation for Bitcoin, or are these two assets on completely separate paths? Let me know in the comments below. And if you want to stay ahead of these massive market shifts, make sure you hit subscribe and turn on notifications. Thanks for watching.